Hi, everybody. We are looking at market history unfolding before our eyes. You really don't get to see this type of activity and live through a cycle that we're living through. Maybe it happens every 100 years. And someone to give us some clarity and who has really navigated this quite well is Luke Roman. And Luke, great to have you back during these times. You've always been kind of a calm voice when things got wild. That's part of your mission and, why you write the forest for the trees so that people, look, I'm a pro and there's some confusing things that I don't understand. So the general public is looking at all this and is, very confusing, some fear in there, and great to have you with us today. You're a watchman for me, and I want to talk to you about your narratives and have them updated. So welcome.
Thanks for having me on. It's great to be here. Thanks for all the kind words. It's very exciting times.
Yeah, and thanks for sitting through one of the longest introductions I've ever done in 1,000 interviews I've conducted. I was telling Jose before we got on the air, I said, trading made me give up golf, Luke. I said, if I have to be aggravated all week, I don't really need to come out here on the course and get aggravated on the weekends. So between trading and golf, I gave up golf. So I want to start off with a drive that you hit right down the center, probably a 400-yard drive. And, it's a little out of what you normally talk about, but you and I got together on Feb 13th. Okay. That's this dot right here, Luke. And I was asking you, this is before the tariff announcements and everything broke. And you came out and I didn't even ask you. You said, Dale, I would sell the NASDAQ 100, the Mag 7s, the Qs, because we said, China, we don't want your money anymore. Do you still believe that was the catalyst that lit the fuse? That we had almost a 30% decline. I think that's the call of the year, Luke. I have to give you the call of the year here.
I appreciate that, especially so early in the year.
Yeah,
It's
yeah. Well,
yeah, I
if
think it's
if people heeded your advice, you saved people a lot of heartache. Because I've actually gotten some message. People could say, "Oh, Dale, you're always bearish," but I was negative, and people really appreciate. It's hard to get that money back if you take a hit, and people are paralyzed like deer in headlights right now. So, where from here, Luke?
that was the moment. Like that was I think and I if I think the pain's going to continue, unfortunately. Um, it's what we're seeing is indeed historic. It is the unwind of the net international investment position of the United States. And
Yep.
so, back in January, end of January, we wrote a piece saying, the title of it was Trump just advocated changing the structure of the U.S. dollar's reserve status. And that was, I think, what we talked about was, look, if we're going to rebalance trade as both Trump and Bessent had started talking about, um, then you've got $23 trillion net in US assets, $57 trillion gross, a lot of it in stocks, and that money's going somewhere else. And so to me, one of the big variant perceptions around what we're watching, there's still this buy the dip mentality ingrained from the last 40 years, really, right? Since the
Yeah.
crash of 87. You all and what I'm saying is unless we come out and hear tariffs are off, Trump's out, Kamala Harris is being put in, which I think all have
Is
roughly
zero
the same
percent.
chance
Yeah.
of zero
Yeah.
percent chance of happening. I don't think investors appreciate the relentless tsunami of selling, right? That is going to happen. We all look back and go, "Oh, look, how could Japan's stock market possibly be worth that great of share of global stock markets in '89?" And
Yeah,
people can look at that
correct.
and laugh.
Yeah.
And in February of this year, the United States was 70, and everyone was high-fiving and hanging on the rim and saying, we're number one, we're number one. And what I'm saying is that 70 is going to 50, 40.
Okay.
Sure,
So
global GDP is 25, right?
can
Like,
I, I've been asking people this way because, I've been bearish a dollar and people were saying, well, Dale, how could you be bearish a dollar, bearish the market at the same time because of recency bias that weak dollar was risk on? Is a weak dollar meaning risk on dead because we are going through a secular change of repatriation of currency to go into uh, individual nations own um, their own markets, and this is really just a part of the de-dollarization move
in a
in
word,
a grand
yes.
way.
Yes. Yeah.
Yeah.
I mean, this
Okay.
is capital flow. And there was some,
Yeah.
I think I've even, maybe not in the last time we talked, but there have been times where we've talked where I said, look, if one thing that would make me nervous, if the weak dollar stock up, would be exactly what you just said, right? Which is this capital outflow dynamic. And so when that's I'd always known that was in the back of my mind, but I wasn't seeing it. And
Yeah.
so when we saw Trump say what he said, when we saw Bessent say what he said, when we saw this America First investment policy memo from Trump the following week, February 21st, I mean, it might as well have said, China, take your money and GTFO,
Yeah.
get that out.
Yeah. Yeah.
And that to me was like, wow, okay, now, that regime of weak dollar, good for risk, good for risk, that's dead. That's
Yeah.
dead.
You're the
The
first
Trump
guy
administration,
I got to say it. They go, well, Dale, it hasn't really been this way long enough to say that. It's early in the game.
it's
Uh,
and that's why I caveated it with, look, if they impeach Trump and bypass Vance and bring in Kamala Harris or Biden or
yeah,
somebody that brings back the old regime, then that's the only thing that's going to change this. Um, Failing that, that's over. Like, we are in the first pitch of the second pitch of the first inning of this new regime, and this is what they want. Now, it's ultimately really good. There will come a point where weak dollar will be good for risk on again,
right.
but we have to get rid of 50 times sales Mag 7 and move it into 2 times sales Parker Hannifin, Eaton, industrial properties, right? So, because I think there is going to be an investment renaissance if things work the way they want it to work. That's what they're trying to do. But between here and there, we've got to go from 70% of global equity market cap to, I don't know, 30.
That's a lot of deleveraging, Luke.
Oh, and I don't know that we'll survive it. Like, that's like Treasury market's breaking after 4 days of this.
Yeah, I mean, it almost looks like a Banana Republic 10-year note market because I was short yen and I pay attention to the correlation rates in yen. And when I started seeing this happening yesterday, I covered my yen, but the yen's still down another 140 with this happening in yields. Um, this, I tell you what, this is not the same old TLT bond market I knew as a kid because when you have a 40% sell off in NASDAQ, I would see bonds lock limit up, not get a 4 point rally in TLT after that kind of massacre and then give it up in 2 days. There's a
And
problem.
there's a problem. And this is just part and parcel of the same trade, which is capital out.
Yeah.
You know, we're talking about trade wars and everyone's focused on, we're such a big consumer of China. That can be debated in terms of sort of how you divide the data. What can't be debated is China's got a ton of our assets.
Yeah.
And the world has a ton of our assets by virtue of the way the old system worked. And what Trump just told us is the old system's dead. It's
Yeah.
over.
Yeah.
And so what do you got to sell bonds, you got to sell stocks, you got to sell dollar, and you just keep selling them. There is $57 trillion for sale. Foreigners own $8.5 trillion worth of treasuries. They'll sell them till their hands bleed to defend their currencies. And as they repatriate, and that's what we watch happening. And like the system is simply not structured for this at all. I mean, it's
Okay.
yeah.
And didn't you say, we've talked about this before, that the Fed's biggest nightmare is a
Yep.
weak dollar and higher rates?
Yep.
Uh, uh, why
But it's
is it
not the
there? Why is it that a nightmare for them?
well in theory because it's weak dollar, higher yields, lower stocks is you're going to have weakening consumption and rising inflation and so
Yeah.
can they come in and cap yields and add fire to the weak dollar? That's what they're going to have to do. Now, it might be the nightmare for the Fed. It ain't the nightmare for Donald Trump. It ain't the nightmare for Scott Bessent. They've been telling you they want a weaker dollar.
Yeah. Well, you know what? They're also saying that the stock market sell-off is not a nightmare for America. But you know what, Luke? I was reporting and reading a lot of things at year end that U.S. households were at historic levels of being long the stock market.
Mhm.
So, although Vice President J.D. Vance says most Americans don't own stock, I don't believe that. Billionaires do not trade at Robinhood, right?
And Bessent talked about this in his interview last week with Tucker, where I think it's a top 10% of stock of Americans own 88% of the stock market,
Okay,
and the bottom 50 own zero. So like,
okay,
I actually put on my Twitter yesterday, I highlighted, the net worth of the total net worth of the top 1% in this country over the last 30 years versus the total net worth of the bottom 50%. And
yeah,
it is like exponential for the 1% and marginally above flat for 30 years for the bottom 50%. And so I think an underappreciated risk is bottom 50%, which is overrepresented among Trump's base and overrepresented among the 1 million Americans dead of drug overdoses, which are just economic hopelessness related. Uh, I think, there is a sentiment that is overrepresented among that bottom 50% of let it burn.
yeah,
Let it burn. This is what we wanted him to do. And he's doing it.
yeah.
And now, like to be clear, like we're both in the same boat. Everyone's in the same boat. And so it will hurt them. They may think it doesn't hurt them, but it will. Um, but again, my job's not to sort of,
Right.
arbitrate the politics,
No, no one will
the
be
market.
insulated. No one will be insulated from this. Do you
No,
think, Luke? No, I
no,
mean, even
no.
if you own Bitcoin,
Oh no,
it,
I think Bitcoin, we've been, as you know, been saying, look, I don't puts on Bitcoin and been saying that for, the last couple months based on this, simply because in the short run, Bitcoin trades with NASDAQ. And so,
okay.
yeah, it's,
I have to push back on it though. It hasn't really. Uh, it got ahead of Nasdaq and dropped 20%. But
yeah.
in my view, watching the markets, uh, Bitcoin, uh, the Mag 7 wished they had a chart that looked like that.
It's starting to separate, right? It's starting to
Right?
separate.
There's some
It's starting to
differentiation
separate.
finally
Yeah, and
happening here.
that's, we said that. We said, look, Bitcoin is not a Mag 7. Bitcoin is a neutral reserve asset,
Right.
trading like Mag 7. And my view is that later this year, as we went through this, they would begin to separate. I am honestly
It's
surprised that
starting.
it started already. I thought it
Yeah.
would take a little more, but the pace of all of this, quite frankly, has surprised me
Me
on some
too.
level.
Luke, I had a 48, 4,900 target based on a megaphone formation. I didn't think we'd get there till June. Okay. When we
Yeah.
got there in April, because I thought it was going to be a buying opportunity if we had grinded down there for another run. But the intensity and the momentum readings are so negative that we've been in an auto wreck and the market's still in shock. And I think that most people should just become spectators or
Yeah.
shorten their time frames and just
Yeah.
what do you think?
Yeah, I agree. I agree. Somebody said to me the other day, or asked me the other day, like, how do you trade these markets? I said, you don't. Like, this is
Yeah,
a 1 in 100 year, 1 in 50 year type event. You stay low over your skis, you save your powder, you take your
yeah,
leverage off, because these are elephants fighting. When elephants are fighting and you're a mouse, and in this, the markets are mice. To be clear, everyone in the markets are mice, because this is a battle of great powers. The
right.
markets the markets are irrelevant in that case relative to this battle of great powers. And so, you don't want to be the mice or the grass when elephants are fighting. You get the heck out of the way and you save your powder and you wait. And so, look, I think gold is fine. I think gold's going to do well. I think it's going to, I mean, I think gold, I think is going so much higher than anyone understands. And I think it will possibly do that faster than anyone realizes.
It's
Uh,
having a big day.
Yeah, T-bills, I've got a lot of money in T-bills for the moment. I'm fine there. I ain't going out any further on the curve in T-bills. I'm not, because the only way the US can even come close to achieving what it's laying out is by crushing the real value of the dollar-based bond market, treasuries, corporates, all of it. And you know, they put a gun to my head and make me buy treasuries. I guess I'll buy treasuries, but not long-term treasuries. But I ain't doing it until they put a gun to my head.
Don't MBA programs teach pension managers and fund managers the simple concept of the higher the yield, the higher the risk? Uh, so I
Those
mean,
are
Luke,
triple A rated. There's no risk. That's the
junk
I
bonds. I mean, they piled the spreads have blown out. Junk bonds look terrible to me. And you know what is the most frightening thing to me about this stock market break is
What's that?
this one chart.
Oh,
Okay, the
oh.
banks. Oh, okay, so here we're talking about the plumbing, right?
Yep.
Uh, and what I'm seeing in B of A, um, is ominous looking. They had
Yeah, that's
what?
an ugly chart. Holy
Well,
crap.
here, let me give you the big picture. Here's the weekly. Look at that. So we've wiped out years of gains.
All support is gone.
Yeah, I mean
Whoa.
it's going for the lows of 23, which would be 4,300 S&Ps. Um, so that, but you know what? We could have a problem with Mag 7, Amazon, there's a problem. Bank America, there's a problem. That's more of a problem than any Mag 7 stock having business issues. This tells me that there are credit issues that people are freaked out about.
Well,
What
to
do you think?
me, I think yes, on the credit issues, but I think the real underlying issue is the treasury market.
Okay.
People like saying this isn't systemic. I disagree. This is as systemic as it gets.
It's
The
a
treasury
sovereign debt crisis.
is a sovereign debt crisis, and it's US, it's everybody. Like the only way the Trump administration can accomplish what it wants to accomplish is if it destroys the real value of the US Treasury market. You'll get paid every dime you rode. But like to me, maybe the biggest variant perception in markets at the moment is this view that Wall Street's in this denial slash bargaining phase of grief about this. So, well, we're going to win the trade war and the real value of my bonds will be just fine. And the answer is one or the other. Either they have to crush the treasury market, and the reason that is to do what we need to do, we're going to need to do a Manhattan Project, speed and scale reshoring into a labor
Yeah.
force that has been slashed because we just closed the
It's not
borders.
there.
It's not there. You're going to need to run negative 20% real rates for the next 2 to 3 to 4 years. But which means your bond market has to go to zero in 3 to 4 years on a real basis. And like, what's the bond market the collateral of?
Nothing.
Banks, banks,
Banks.
everything. It
Banks.
underpins everything.
Yeah.
So they've
Okay.
got to get they've got to
Go.
get other collateral. If I was a bank, I'd be buying gold hand over fist, to be honest.
Okay. All right. And you say that, so that's your metaphor that we're trying to treat a root canal with a jackhammer.
Yeah, I said my metaphor is because I said if and I've been saying this since November. Now, whenever they start talking about Doge, so maybe December,
Yeah.
I said, look, great. Remember the whole quaint, well, Milei did it. Milei did it in Argentina. What could possibly go wrong? And I remember going, do you seriously believe that? Like,
Yeah.
if you seriously believe that, like, oh my God, get in a bunker. And here we are. But no, my metaphor was that you got to devalue debt to GDP first drastically before you start Doge, before you start reshoring, because otherwise it's going to be like giving yourself a root canal with a shotgun. I mean,
How
it's
do
it's
they,
effective.
how do you accomplish that?
In the end, you got to devalue, like, it's significant negative real rates for a compressed period of time, a
And a
very compressed
collapse
period
of
of
the
time.
dollar. Collapse
Collapse of
of
the
the
dollar.
dollar.
You got to collapse the dollar, or and again, against what? Gold. Like,
Yeah.
you got to
Okay.
revalue gold, buy down the debt. Like, I will buy 10-year treasuries, as many as they want to offer me. They revalue my gold to where it should be relative to foreign debt, which is probably somewhere between, it's a minimum of 12,000 and probably closer to 20 or $25,000 per ounce of gold. I will sell my gold there and I will buy 10-year treasuries at 4%. I will buy them at 3% for them. Happy to. But I ain't gonna
Okay.
do it unless they put a gun to my head at at 4.5, with the market value of US official gold trading at 10% of the foreign held debt outstanding, with our deficit growing 2 trillion a year. And oh, by the way, the deficit, based on what the stock market's going to do, it ain't two now, it's 2.5 minimum. And if we have a recession, which is looking increasingly likely, that 2.5 can be 3.5.
We're in
And
one
we
already, aren't we, Luke?
probably,
Real
probably.
estate, real estate market collapse part of this as well, right?
And when you see things like Delta Airlines, right, which is sort of shifted to corporate in the higher end, come out this morning and say, we're suspending guidance because we don't know. Like, I mean,
Yeah.
I am sure after last weekend, because I had multiple people, tell me, many multiples, like, I put out something on X of like, hey, what comes next? Having been in the bottoms up research business after the tariff thing and the stock market doing what it's doing, is last weekend the emails will go out in corporate saying immediate travel freeze on all non-essential travel.
Right.
And people are like, oh, those have already started even before the tariffs. But yeah, now we're all getting them. And
Okay.
anyone who's worked in corporate for any period of time knows what that means, which is when you see non-essential travel freeze, you start freezing non-essential
Yeah.
spending because it means
Yeah.
layoffs are coming. And
Yeah.
so, yeah, I think this thing's going to feed on itself super fast. And so now we're into the part of the movie where, which is why I said you had to do the value the debt first, is the deficit's going to go from 2 to 2.5 to 3 trillion to 3.5 trillion, depending on the severity of the recession. And foreigners are net selling, and it's the collateral of the banks who are taking losses. So they're all else equal treasury sellers. And oh, by the way, every boomer in the country that's got a 60/40 portfolio has just seen the 60 go to
Yeah.
45. And so now they need to make living expenses. At some point, they will start selling something, probably bonds to raise. It's like everyone is long bonds as long as they could be. Who's
Yeah.
the buyer? There's only one buyer. It's the Fed.
Yeah.
It's the Fed or Treasury after they revalue.
When do they come in? They all we have from them so far is a slowing. Well, basically QT is over. When did they come
I think so. I think days. I think they're going to be here in days
in days?
because,
Okay.
oh yeah, I just retweeted something from Harley Bassman as I came on the air. Like the move volatility index is at 172. Like,
Yeah.
the Fed has lost control of the bond market as we
Yeah.
sit here right now. All leverage will be gone. Now things get interesting.
I
Things
yeah.
get more interesting.
Yeah, I gave up as of this week. Give up trying to position trade in the 10-year because
Yeah, think about that. It's incredible. In the 10-year,
yeah,
it's trading like Dogecoin.
yeah. Well, Luke, I think that people need to hear more than 30 minutes of you, and I've heard more than 30 minutes of you, and I learn and how do you keep? Let's move it away from the markets just for a minute. So all of these things that you see coming. It's not exactly time to pop the champagne bottle. Um, how do you keep your attitude up and your mission to keep working with people when you see what's ahead in the future? and you have kids and everything. How do you keep a good attitude despite what you know could be around the corner?
I think it's exactly that. It's helping clients. I mean, it's been very touching. I've received a lot of feedback over the last week, like, hey, I'm actually, down
Okay.
5% only in my entire account because
Yeah.
I've been reading you and I understand what's happening. And yes, it's disturbing, but I'm not freaked out. What you kind of laid out, what how the pathway is largely happening. Thank you.
Yeah.
So those types of things, it makes it, and I'm just, it's a humbling business. You get things right, you get things wrong. This is one thing I've gotten right. And it's an important thing. And it's one of these things where I love the game and I love doing it. And I'm just trying to figure it out and share with people that are interested in hearing what I have to say about it. And and some of it is motivated. Look, ultimately, it's been obvious to a lot of people far smarter than me for a long time that the system was unsustainable and it was going to break at some point. And so there's a great quote, I forget who it is, but it's basically it's almost a prayer. If there is to be trouble, let it be in my time so my children may know peace. And I think that's exactly what we're watching, which is, look, if
It's
this is
beautiful.
gonna break at some point, you know, if there's gonna be a fight, let's have it now. And metaphorically, hopefully only, in terms of the markets, let's
And it
let's get
lasts and it lasts a decade and then there's a rebirth.
a total rebirth. And I don't even know if it'll last a decade. I think once people sort of but I do think it's probably going to last several years of
Yeah.
sort of a turnaround rebuild.
Yeah.
And yeah, and then the world is much better for my kids. And
Yeah.
at the end of the day, that's all we all want as parents, right? It's not about us, or it shouldn't be, in my opinion, as a parent. It shouldn't be about you over your kids. It should be your kids over you. That's how we're all here. So
Yeah.
those are the kinds of things that I think just, you know, keep because there's ways this could really get as ugly as it's been. It could get pretty dark, and so I'm optimistic it won't. I know what I'm watching for signs that it's taking those turns, and we'll deal with that if we have to. But those are the things that I think really kind of keep me, just excited to be privileged to do this.
Yeah. All right. A man with a mission, expressing it here and through multiple videos. And Luke has his own YouTube channel too. Stay in touch with this man. Could mean the difference between getting through this not unscathed, but able to have the resources to rebuild with the rest of the world. You're our watchman, Luke. Thank you for being with us today.
Thanks
Appreciate
for
it,
having me
buddy.
on. It was great. It's great talking as always, my friend. Have a great rest
All
of your
right.
day. All
Luke
right.
Roman, everybody. That's a wrap. It's recorded. Listen to it a few times. And don't just count your pips, count your blessings. Adios. See you, Luke.
All right. Take care.